Hey, we got a really cool video here for you guys. We've broken it down into two parts. One interview that we did with Jim Steffler from Steffler Mortgages and Dominion Lending Centers. We're going to talk in the first video here about purchase plus improvements mortgages. So, really cool topic. We're going to discuss the ins and the outs and how you might want to apply this to a property that might need a little bit of TLC cosmetically, but you can build that renovation cost into the mortgage. So we're going to answer your questions. So stick around and watch the video. Hey, we're here with Jim Steffler. He's one of our go-to mortgage brokers with Dominion Lending Centers. Jim, thanks so much for joining us today, or joining me today to chat about some hot topics in the mortgage industry. Trying to shed some light on some, programs that are available for buyers, and to talk a little bit today about the current mortgage situation with higher rates and options for sellers as well. So,
Yeah,
Jim, one of the things that I've come across in the last little while is some different options and thinking outside of the box for buyers. It's harder for them to get maybe the property that they want. There's a little bit of a gap between sellers' expectations and buyers' ability to buy.
yeah,
Looking at some different programs, and one that came to mind that I feel would be a great program to highlight for buyers that are out there right now is the Purchase Plus Improvements program here in Ontario. Would you be able to shed some light on what that program looks like here in Ontario?
sure. So, by the way, that's a great one to bring up because I get asked about this one all the time too, and I'll kind of share what it is. It is a little lender specific, Sean. So each lender kind of has their own criteria around it, but I'll kind of just give like an overview of what most lenders do. So a Purchase Plus Improvements is designed that, let's say you see a house, but there's just something about the house which isn't quite right. So maybe the kitchen could use a little bit of a freshen up, or it's got a maybe it's got a beautiful home, but the one of the bathrooms still has like a brown bathtub in it from 1984, right? So if there's something like that, you can do a Purchase Plus mortgage, and what that is, the lender will essentially front you the money to do the renovation to fix that area and then roll it right into the mortgage for you. So pretty cool. So I'll use an example. Let's say you saw a house and the upstairs bathroom was a bit of a mess, and you went out and got a quote on it, and it was $30,000 to make that, to make the bathroom of your dreams, like little, maybe the sit down thing in the shower, right? So what the lender will do is put $30,000 extra onto the mortgage, and then you get your bathroom renovated. Pretty cool.
That's awesome. And so, what do you see typically as far as qualifications around that, and maybe a ceiling? Is there a minimum purchase price for that, or how does it work as far as how much they'll give you?
So ceilings, and I'm going to put an asterisk here. Ceilings usually 40,000 ish. Okay, that's the asterisk. Is there opportunity sometimes to get a little bit more? For sure. Usually 10% of the mortgage, 10% maximum to the mortgage amount. So let's say, if somebody was getting like a $300,000 mortgage, usually it's an extra 10. That's about it. But I put asterisks on those things because those are kind of, again, it's very lender specific, right? And sometimes depending on how much the quote comes in and stuff, there's a little bit of wiggle room on that sort of stuff. Yeah.
Awesome. And from that, from going into one of those product, are there any criterias, or how does that impact, the process on getting a approval versus your standard approval?
Gotcha. I'll speak to both because the common thing I see is sometimes, and this isn't, by the way, the client's fault, just in this market, it's so hard to qualify for a mortgage that usually people spend what they can afford. So if I say, hey, you can have a $600,000 mortgage, chances are we're going to end up 595 to 6, right? Just because, in fairness, the stress test is really hard right now, and it's super tough to qualify. These aren't people overextending themselves. They're just they have to spend their whole darn budget to make it work. So the common mistake I see around Purchase Plus is people go, great, Jim, I found this house. we're going to need a $600,000 mortgage, and then I'm going to need an additional $30,000 to fix that bathroom. No bueno. It would have to be a $600,000 because you still got to qualify for the mortgage you can qualify for. So in that case, they could have 570 and then add the 30, and that works. But they still have to play within their budget. And that's the main thing I see, which sometimes people don't understand about Purchase Plus. They think they can still spend their budget and then just kind of add to it. That's one. I'll talk generally speaking about how it works. Again, every lender is a little different, but typically you get a quote. So you go out and you get a professional quote for how much it's going to cost to do the renovation or do the work. You send that into the lender. Sometimes, depending on the lender, they'll ask for an appraisal. And the appraisal kind of include two things. Hey, how much is the house worth now? And then how much will it be worth if we, fix that eyesore of the bathroom with the brown bathtub, right? And they take a look, and as long as the numbers add up, that $30,000 you're putting in adds $30,000 to the price of the home, they're good with it. Like, they're pretty happy with that. And then usually after the fact, to kind of give the viewers kind of an idea how this works, the lender will send that $30,000 to the lawyer on closing day. The lawyer will hold that money in trust. And when the work's completed and we can demonstrate that the work's completed, that money gets released and you can pay your contractor and finish it off.
That's fantastic. So in essence, they release it to you in draws rather than, here's 30,000, go do your work.
Correct.
Right?
Correct.
Awesome. Yeah. So
because they want to make sure, they'll have the solicitor usually hold the amount in trust because they just want to make sure that you actually, got the bathroom fixed, right? You didn't head off to Vegas, put it on black, and see if you can double up, right?
Yeah, and get a $60,000 renovation instead of the 30, right?
Right? Not a bad idea, but no, can't do it.
Yeah, no, for sure. So I guess from that, the key would be having some sort of budget to front the renovation right off the hop, or working with a contractor that might be able to put that on like where they get paid on the draws, where they maybe you cover the materials and they cover the labor and they get the draw at that point.
Correct. Like I usually, because I have a lot of discussions with clients about this product, and I only really think there's two negatives to it. Negative number one is, and it's kind of a paradox, usually the reason you're putting this in the mortgage is because you don't have the funds necessarily to do the renovation up front. But you're probably going to have to front some cash. You're going to have to work it out with your contractor. So that's a bit of a challenge with the program because the lawyer is going to hold that money back. So you're going to get the money, just you might have to pay for some of it first so you have access to some sort of capital to do that. Or can you make can you figure it out with your contractor, right? So that's kind of challenge number one. And then challenge number two, I'm sure you see in your world, is you do have to kind of choose awfully quick what you're going to do, right? You got to get that contractor in there. You have to take a look at that. You have to make a lot of decisions really early. And, I don't know about you guys, Sean, but like when we've done renovations around the house, sometimes we agonize over these things for like a year. I think the bathtub should go in that corner. I think we should put it here. I think maybe we put it in, like, you have those, you can have all those nuanced conversations. Whereas, this way you're going to be moving pretty quick because you need to make those decisions before you even move into the house, right? So you're making these decisions based on very limited visits to the home.
Right. Yeah, and then I see a compounding effect on the renos as well. So sometimes you I just want to do the floor, and then that floor turns into, well, now I got to either get quarter round or I got to do the baseboards, and then I got to do this, and then it segues into, well, I did the living room, now I got to move and do the kitchen now because it's attached to, right? So it starts
just spiraling, for sure.
So definitely tough to navigate. Now, on the topic of different types of renovations, what are the typical improvements that you see that are eligible underneath this program?
Yeah, no problem. I'll give you kind of a general rule of thumb. It's got to be something which makes the house worth more money. So it's got to be something that makes the house tangibly worth more money. And I'll use examples, kitchens and bathrooms and finishing a basement. I have seen roof approved. I have seen a roof approved in a small amount. So I've seen that. But I'll tell you things which don't get approved. Things that don't get approved typically is like, hey, I want to do the furnace. Yeah. Well, the lender assumes that the house has a working furnace and that it, you know what I mean? The house isn't worth tangibly more with a brand new furnace. Or, hey, I want to replace my air conditioner. That wouldn't fly. I'll throw another one too, which people forget, is all the appliances. They're not covered, right? So people will want to use their purchase plus to, buy the refrigerator and, buy the washer and dryer if they're doing like if they're doing their laundry room. You can't use the funds towards that.
No. So appliances off the table, anything cosmetically that actually adds value to the fixture of the home itself is eligible underneath the program.
Correct. And again, though, it'd be tough to I've seen clients ask me and say, hey, I want to do a new deck. Well, not really. No, not really. Like a new fence. No, that's not going to make the house worth a ton more money. So it's just more something that'll make the house worth more bucks. Yep.
Right. So typically you're looking for something that is dated, it's older. You're looking to spruce that up, make it newer, revive it. And for anybody that's watching or listening right now too, the one hack that I'll give you is go on to Kijiji or Facebook Marketplace, something like that. If you're looking at doing the appliances, you can definitely pick something up for like a quarter of the cost that it's going to be brand new, but still gives that aesthetic feel. So if you're looking at, those older yellow appliances from back in the 70s and you want to upgrade it to stainless steel, just go find a stainless steel that's used. Go find something scratch and dent. Find something that fits within the budget, that looks nice, that will still upgrade that space for you, and give that same look and feel that might not be covered underneath that program. Now, Jim, as well, like say they had like a $30,000 budget that was set aside for them, and they came under budget. How does that work at that point?
You typically got to spend that budget, to be honest, Sean. I'd recommend go find another room in the house now that you want to dump some money into, right? Make that place look a little bit better.
Sounds good. Awesome. So spend the budget. That's great. Definitely
spend your budget. Yeah,
budget. I'm sure that most people go over budget than they will under budget most of the time, but
I do. That's what I typically see. So yeah, typically I get the call of, hey, we're a couple $1,000, $2,000 we need to chip in.
Yeah. So then, so similarly, would there be, I guess, what would happen if the improvements exceeded the budget that they were looking to spend? Are they just kind of tapped out at that 30,000, or what would that?
Well, I think that's why you're pretty careful with your quote, and I guess that would be another disadvantage, right? That's where sometimes people have to dig in their savings or talk to the bank and mom and dad. And I think that's partially too why the scope of the project, lenders really want that quote to be quite laid out. Like this is what we're doing. And I always tell my clients I'd rather see a quote a little high than quote low, because you're not going to get more cash.
Yeah. I still think it's a great program, and I've seen many of my clients that have gone through this program as well that, could take something, that might need a little bit of love and turn it into their home and have that fresh slate with it. So, especially, it's a perfect program. Gets you into something that you might not have been able to get into at the price point that you were looking at getting into it as well, right? So,
Me too. Because it takes that house, which maybe has just that one flaw, which just doesn't make it the perfect home, and you can take care of it. You can get it how you want it, right?
For sure. And for all of the people that are out there watching right now, listening right now too, the one piece of advice that I give you is that you're not going to be competing with flippers inside this type of product usually, right? So you're looking for something that doesn't fit the flip criteria, but fits the end user criteria if that small adjustment was made. And it's just going to force appreciate the house just that little bit more, where the numbers don't make quite that much sense for a flipper or a contractor that's coming in there to flip the house. But it makes sense for the consumer and that end user. So usually it's, kind of the perfect storm has to happen as far as finding the right product that's out there, that's not priced so low that you got the competition with the flippers and people that are looking to, turn a profit on the house. You're looking for somebody that's maybe overpriced it a little bit for the flippers, but underpriced it for the market.
Yep.
I hope that you've enjoyed this video today and the interview with Jim. This is part number one. Stay tuned to the end, and we'll link you to part number two in our interview, where Jim goes through a deep dive with today's current mortgage situations with higher interest rates and how to navigate a possible interest rate renewal. So, once again, if you want to reach out to Jim, Google his name, Jim Steffler Mortgages, and all of his social media will pop up. Do yourself a favor, follow him on social media. He puts out some great content, keeps you up to date with the current mortgage situation, and posts quite a few funny videos on there as well. So give Jim a follow. And if you haven't already, definitely click that like, click the subscribe button here, and share this video with a friend.